Are we back to 2020? According to what we're going to see in the charts, it seems like everything is always green. Are you ready to summarize this week with all the major news that happened? And of course, summarize the indices, the major averages, and get yourself prepared for the week ahead. Let's go. Hi everyone and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stocks, and on this video we will cover the major things that happened this week. Let's start by diving into the major averages. The Dow Jones ended the week plus 2%, the S&P almost 2%, the Nasdaq with a 3.35% gain, and even the Russell 2% gain. When we summarize year to date, you would be surprised, but year to date 2023, Dow Jones is up 2.5%. The S&P is up 6.5%. I remind everyone that the average for the S&P over a course of years is 8%, 8 to 10%. We are very close to that. Only January. What's going to happen the next months ahead, we'll see. Nasdaq is up 18.8% and the Russell 9.8%. The crypto market wasn't that green this week. We can see the Bitcoin almost unch, and the Ether actually going down 3%, but year to date, you can see all the figures. Bitcoin is up 39% and ETH is up 31%. When we look at the major sector, we can see that it's basically a mirror image of what happened last year. Consumer discretionary is leading, communication technology, and on the red, we see healthcare, utilities, and consumer staples. The right column is, of course, the last week. When we look at the different industries, we can see that clean energy, retail, and internet are the ones leading the gains, and the gold miners, airline, and solar are the one lagging. This is how our heat map will look like. You can see that healthcare is on the red side, and of course, consumer non-durables. The others are green, very, very green. Microsoft, Google, Apple, Amazon with very significant gains, and of course, Tesla with almost 40% gain for the week. That is after reporting earnings. And if we're talking about earnings, let's summarize them very, very quickly. Verizon missing their results, and the stock went down in the first reaction to the stock. Microsoft with a very mediocre quarter, and started plus 4%, ended the after hours minus 2%, but was able to overcome those losses. And Boeing with a disappointing quarter, AT&T with a strong quarter with growth in subscribers, and Tesla with a good quarter, but mainly the reassurance by Elon Musk that the demand is so high that it exceeds the supply. And last on this coverage is, of course, Intel with a very weak quarter, and they're starting to realize the fact that it's going to be very difficult to catch AMD and Nvidia. Let's dive into the GDP. GDP came strong for Q4, plus 2.9%. I remind everyone that we need 2 consecutive quarters of negative print. We had that in 2022. Recession wasn't declared. If it's going to happen in 2023, that's a big if. And from what we're looking right now at the markets, it doesn't seem that way. The PCE, the inflation price index that the Fed likes to look at, came lower on December. You can see the decrease from September being 6.3 all the way to 5% in December. So we are decelerating in the inflation, both on the PCI and on the CPI and the PCE. But Venezuela, on the other hand, actually slows their inflation to be 234%. Could you believe in inflation of 234%? That's crazy, crazy, crazy. Indonesia signals the end of hikes as Fed peak rate comes to view, and a few more banks did the same thing. Bank of Canada decided that this is probably going to be their last hike, which signals to the Fed that maybe other banks are starting to understand that they're very close to stop hiking. The German economic minister comes out with a very interesting take, says that he doesn't see any signs of recession. Part of the reason why he says that is because of you can call it global warming, you can call it the high temperatures in Europe. Basically, what happened is they didn't need all the gas storages, and because they disconnected themselves for Russia, there was a clear threat that the prices of gas would go up, natural gas would go up. But because it wasn't a cold winter in Europe, the prices of nat gas are very low. So recession, hopefully, is in the rearview mirror. We'll see. Polish rate hikes are also starting to think of how to cut them at the end of 2023. So major banks are starting to think about that. JP Morgan, once they're running their models, they're seeing that recession odds are starting to fall. So not only in Europe, but also in the US, maybe recession is not going to happen. Maybe there will be a soft landing. But on the currency side, two interesting headlines came this week. One is the Russia, Brazil, India, China, and South Africa are thinking or considering their own currency, call it BRICS, call it any other way, to disconnect between the petrol and the dollar. And also Brazil and Argentina also thinking about creating their own common currency. So a lot of interest on the currency front. Whether it will happen or not, we will see in the coming months. Initial jobless claims came this week and keeps falling. We're going to see in the next few minutes a lot of layoffs. How come we're not seeing them in the data? Where the reason for that is quite simple. Most of the companies that have let go of workers haven't done it in the regular way that we've seen in the past. They haven't stopped or started layoffs and giving everyone 2 weeks notice and that's it. They're giving months of notice. When they're giving months of notice, people during those months are still paid. They don't claim unemployment and they're finding other jobs. If all of this is happening, we won't see jobless claims going up, or at least we won't see it for the next few months. Why is that a problem? Because the Fed is meeting this week and they want to see this line going up, but it's not going up. We'll see what the Fed is going to say. Let's continue. If you're waiting for the S&P to be cheaper, FactSet ran the numbers and said, if you're waiting for a cheaper S&P, you might be waiting in vain, because trailing 12 months of PE for the S&P as a whole stands at 19.1, which is the lowest in the average of the 5 years. You might say, okay, 5 years, there was the COVID boom. No problem. Go back 10 years. The average is 20.5. So we are now lower than the average 5 years and the average 10 years. Might be time to start nibbling. Might be the reason why the S&P is going up. We'll see that in the next few months as well. Let's continue to OpenAI and Microsoft. OpenAI and Microsoft extend their partnership. And by extending their partnership, Microsoft invests $10 billion in Azure credits to OpenAI. And that is no doubt one of the biggest headlines this week. You can see it through Microsoft Twitter as well. BuzzFeed using the buzz around ChatGPT and saying, you know what? Maybe we can create a lot more content using OpenAI and ChatGPT. Their CEO says AI-powered content creation will become part of our core business in 2023. And this brought BuzzFeed stock BZFD up in the last week, in the last 5 days, by 307%, from around a $1 stock to a 3.87. Maybe they don't need ChatGPT. Maybe all they need is just good headlines on what they're going to do. Or maybe it means that they have too many mediocre writers. I don't know. Salesforce, still in the rumbles around what is going on there. After the co-CEO leaving, after several SVPs leaving, now Elliott Management, an activist, is taking a big stake in Salesforce, and there's going to be a shakeup in the board of Salesforce, ticker CRM. Disney and Avatar surpasses $2 billion. This franchise is very, very strong. They have 2 more films that have already been recorded that are going out in the next few years. But this is a very good tailwind for Disney stock, ticker DIS. Chipotle. Well, between March and May, it's called burrito season, and they need people to work. They're hiring 15,000 restaurant workers per CNBC. Chipotle, ticker CMG. Walmart is also raising their minimum wage as retail labor market remains tight. But somewhere that it's not so tight is tech. Tech is leading the layoffs. As of last week, we had 75,000. I believe we're going to see a tick higher in this number. These numbers are by January 22nd. You can see here in layoffs.fyi, the bar here shows the amount of companies that have laid off employees. You can see here, let's go back. You can see the number here, 68, 75. The numbers are crazy. And let's go over a few of the companies that reported this week, that reported layoffs this week. TikTok warns remote employees that they're risking their jobs by working remote. Bank of America freezes most of their hiring. Dow, which is a chemical company, announced that they're planning to cut 2,000 jobs. SAP planning to cut 3,000 jobs. IBM planning to cut 3,900 jobs. Ford selling a factory in Germany, 3,200 jobs there to BYD, a Chinese company. Uber Freight cuts 150, which is 3% of their headcount. Alphabet, through their 11 or 12,000 headcount reduction, is laying off people from DeepMind, which is the layer that is supposed to compete with ChatGPT, and Waymo, which is the robotaxi that's supposed to be a competitor to Tesla's FSD. Google also reduces pay for their executives. 3M, is going to cut 2,500 of their global manufacturing roles. So layoffs across the board by the thousands. And when you survey US firms, 20% of them expect to reduce their headcount. Some have already, or at least in those 20%, most probably have already done that before. If you haven't subscribed yet to the channel, this would be a great opportunity to subscribe to the channel. It only provides you the ability to get notified every time a new video is launched. Google employees scrambled for answers. Well, their layoffs were so swift and across the board that employees don't really know what's next, and that is a big problem for a company like Google. Let's put aside the layoffs. Let's go over the other headlines. Bank of America, JP Morgan, and other banks reportedly team up to create a digital wallet which will rival, they're saying Apple Pay, I'm saying PayPal, PYPL. That is major headwinds for PayPal. Or maybe they'll acquire them. We will see in the next few weeks. Palantir announces the availability of their Foundry, which is their AI analytics platform, on the Microsoft Azure. Well, Microsoft is spending a lot of business development on Azure, getting more and more companies to compete with AWS. Nancy Pelosi, the best trader in the world, actually let 100 Roblox calls expire worthless with a total loss of $300,000. So not every trade that she takes is a winner. Amazon, ticker AMZN, which is reporting during this week, we're going to talk about their report, started a new subscription to their Prime members. Pay $5 a month and get 50 plus generic drugs as part of the subscription. Sounds great if your drug is inside. Very interesting approach to trying to compete. CVS and Walgreens, we'll see it in the next, probably hear it from Amazon during their earnings call. Google has become one of my favorite topics to discuss. So in this case, US Department of Justice sues Google over ad market, and it's a huge antitrust fight with Google, where actually Google, on this case, is probably not going to lose. The reason why is they're trying to combat them on their monopoly around ads, where they don't really have the monopoly. If they would have tried going after their search, that's something else. And Google in response says the DOJ is doubling down on, where you can read it in front of you, basically saying nothing's going to happen and it's the wrong case. Google, DOJ, this is probably part of DOJ's fight for big tech, against big tech. Shopify, with a very dramatic announcement this week, increasing the price of their basic plans and other plans by 33%. This was a huge tailwind for Shopify's stock during this week, because if they have the stickiness they have, and now customers are going to pay more, guess what's going to happen to the revenue and to the earnings? Shopify, ticker SHOP, SHOP. Apple is in talks with Disney and other content providers for their VR. Apple, as you remember, is producing their augmented reality glasses, but they need content. No one's going to buy something that you can't do anything with. So now they're talking with Disney, which has a huge library of content. OPEC is going to meet during this week and talk about changes to the oil policy. Probably not going to be a lot of changes there. Spotify, actually, I would have covered that earlier, is cutting 6% of their jobs. If you're using shipping rates, well, they're down, and you probably noticed that in your invoices. Shipping rates are now down to the levels they were June 2018. When you look at it visualized by Visual Capitalists, you can see it here. The peak was around $10,000. Actually, I heard 20, but let's give that, let's put that aside. And now it's dropped to 2,000. That is very good to combating inflation, because if it was very expensive to import, now it might not be that expensive, which means that prices can go down. Doesn't mean they will, but they can. During the week, there was also this crazy thing that happened in the New York Stock Exchange. Actually, it happened both in the NASDAQ and the New York Stock Exchange. Apparently, 251 stocks were halted a few seconds after the market opened. If you don't know what happened there, in very simple terms, what happened was this. Someone left a backup system running or something like that, which created an issue where the opening price wasn't resolved in the right way. Basically, all the aftermarket and pre-market wasn't calculated in the right way. So stocks went up 20%, went down 20% without a real reason. The only reason is the liquidity wasn't calculated in the right way. This was, of course, dealt with, and the halt stopped after a few minutes, and they found the employee, the staffer who left the backup system running. Probably another one to the list of the layoffs. Tourists come back to Macau, and China is going all in on the opening. They forgot their COVID-0 policy, and they're enjoying the boom in the market. Chevron is announcing a $75 billion stock buyback, and Biden administration doesn't really like that. They don't really like that because they're going back to Chevron saying you're not investing in reducing prices. Basically, you're investing in your shareholders, which is a fair claim, but that is what they're supposed to do. So that's Chevron, ticker CVX. Hindenburg sends out a long report of them being short on Adani's business, the third richest person in the world. Adani's hit very hard in that short seller report. His stocks around the world go down. They're going down by 20 to 30%, making him lose between 30 to 40 billion dollars of assets. Now, I have no idea if it's true or not. That's what happened. Bed Bath & Beyond, their shares get halted, and after plunging, of course, because the retailer warns that it just doesn't have enough cash to pay. As simple as that, they're probably going under. Uber pledged to shift to 100% electric vehicles in 2030 in the major cities. This is an amazing announcement because it means that anyone that is selling electric cars will now have, if they didn't have enough demand, now they're going to have even a bigger spike in demand for EVs. And on Friday, Lucid's stock went up 92% and ended up around 34% up. The reason for that is because there was a speculation, a rumor. No one behind the rumor, no one knows where the rumor came, that the Saudi government fund is taking back Lucid to be private. Is that true or not? No one knows, but anyone that bought Lucid for $10 and sold it for 16 or 17 made 60 or 70% in a few hours. Now, of course, the stock went back to $13, still 34% gain. But again, no one knows if it's true or not. And once it's not, the stock will drop like a rock. Tesla, and we're not going to talk about their results. We're just going to talk about the news because they have committed investing $3.5 billion in Nevada and expanding or building a new facility to produce the semi-trailers, the electric semis. And that is everything that happened this week. Are you ready to cover next week? This is what is expected for us. Before we start this, let's go over the economic calendar. January 31st, FOMC participants are going to be locked in for 2 days, and they're going to discuss the future of rate hikes. February 1st, 2 p.m. Eastern, we are going to get the rate hike, or actually how many basis points they're going to hike the rates, but mainly 2:30 Eastern, we're going to hear Jerome Powell talking to the markets. Why is it dramatic? If I'll go back to how I started everything, this is how the markets look year to date. This is not what the Fed wants, or at least what we understand that the Fed wants. Markets going risk on is not what the Fed wants. The Fed wants the markets going risk off. So the Fed's going to be very hawkish. They're going to try to explain to everyone that is not the time to go into stocks. We'll hear that. And once all that happens, look at our earnings this week. We have SoFi, NXP, Whirlpool, ExxonMobil, UPS, GM, AMD, Snapchat, Meta. We have ConocoPhillips. We have Eli Lilly. We have Amazon, Apple, Alphabet, Ford, Qualcomm, and Starbucks. All of them on Thursday. Major earnings week. And to the question that we've posed in the last few weeks, did we break out this wedge? And the answer to that, the simple answer is yes, we did. If you remember, we took the highs during the downtrend, we connected them by this line, and we see these are candlesticks. I can change it to a regular line chart. We can see that we have broken out of this wedge. Is this break real or not? That's a question that everyone would debate in the next few weeks. Fact of the matter is, we have broken. Now, the next resistance is around the 4,300. Will we go there in a straight line? Probably not. This week is a very dramatic week. There's going to be a lot of turbulence in the market. But it is encouraging that for the last 5 days, we have closed above the 200-day moving average, which all of these things are technical analysis, because if we look at P's, we can't really calculate P's on a 5-day basis. We need to go back. So what we have here is we do have a market that is starting to see the end of the rate hikes and might be a bit premature, might be on the right time of saying risk on is back on the table and risk off, who cares? The one thing I can tell you, that everything you've seen here is not financial advice, and you should consult your financial advisor for any changes that you do with your portfolio, as you've seen in the beginning disclaimer. And the last thing is that in a week like this, a lot of danger ahead. We'll talk again next week. Till next time, would it be great to expose the channel by liking everything you've seen. See you next time. Bye-bye.